We are now going to discuss what it means for something to be from a South African source. How do we determine that? So the first thing that you need to see is that there are two main sections or ways of determining source. There's the Section 9 rules. So Section 9 is a section in the Income Tax Act itself that gives us a couple of rules where it tells you, gives you specific transactions and says if you receive, for example, dividends from a South African company, it is from a South African source. And then if there's no Section 9 rule that discusses it, then we will look at the common law rules. Now the common law is the common law of South Africa, and there are some principles from there. So how we determine what is from a South African source is by following the steps on this slide. So the first step that you will do, step 1, says you'll have to consider Section 9 and then ask yourself, is Section 9 applicable to this transaction that you're seeing? So this amount that this non-resident or this even a resident for that matter is receiving, remember what we're looking at here is the South African source rules. We're not looking at the gross income definition. So the gross income definition says non-residents must be taxed from a South African source, sure, but the concept of South African source is just a concept of the source. It's not just to do with the non-residents gross income rule. Okay, I'm not saying that South African source is important for things like the gross income definition for a resident of South Africa. I'm not saying that. I'm just saying that South African source as a concept is a concept that exists independently from non-residents. We just use that concept when looking at gross income for non-residents. Okay, so the first step is, does Section 9 apply? So this transaction, is it covered in Section 9? And then does Section 9 tell you it's from a South African source? If you say yes, it's from a South African source, and then the amount could be gross income. I'm saying could be because you still have to apply your normal gross income definition principles. If the amount is capital in nature, for example, it might be from a South African source, but it still won't be included in gross income. Okay, so step 1, does Section 9 apply? No. Then consider step 2, which says the common law of South Africa. Does that apply? If you say yes, and it's a South African source, again, it could be gross income. If you say no, then it's not from a South African source, and it cannot be gross income. So let's look at Section 9 first. And there's a lot of information here. Make sure that you look at the sections which are examinable. So this little block over here summarizes what we see over here. And I've done that deliberately also for you as a way of seeing for yourself how you can simplify things which the Act says. So let's start. So it says, if we look at Section 9.2, let's zoom in a little bit here. An amount is received by or accrues to a person from a source within the Republic if that amount, okay, and then they give us the rules. So I want you to see, they don't talk about non-residents or anything like that. They just talk about an amount is from a source in South Africa if the following applies. A, it constitutes a dividend received by or accrued to that person. Now, you see here, they don't say South African dividend or foreign dividend. The reason why they don't is because if you go and look at the definition of the word dividend in Section 1, that refers to South African dividends only. So the South African dividends. South African dividends for now is basically if it's paid by a South African company. B, if it's interest, where that interest, there's two different sections, and I want you to see it's an or here. So it's either 1 or 2. If they apply, then it's from a South African source. Right, so 1. It is attributable to an amount incurred by a person that is a resident. So what they're saying is if interest is paid to someone, so let me just going to write it like this. Mr. X receives 10,000 rands interest from Mrs. Y. So what this says is if Mrs. Y is a South African resident, then that 10,000 rands is from South African source. So if it's incurred, the person who is paying it is a resident. They say unless the interest is attributable to a permanent establishment which is situated outside of the Republic. Now, basically what that just means is if Mrs. Y, let's say, she has a business in the USA, and Mr. X, so let's say she's a sole proprietor of a business in the USA. Mr. X gave money to that business. She's a South African resident, but she's got a business in the USA. Now that, because of that money that Mr. X gave to the business in the USA, which is a permanent establishment outside South Africa, she pays the interest. Then this will not be a South African source. The idea is that it's actually coming from that business situation over there, which is in a different country. Not too common to see, guys. I'm just explaining to you. So, or it is received or accrued in respect of the utilization or application in the Republic by any person of any funds or credit in terms of any form of interest. It is, so what do they say? It is received in respect of the utilization or application in the Republic. So what that means is, Mr. X receives 10,000 rands interest from Mrs. Y, like I said. Right, so like we used there. So if Mrs. Y, she could be a resident or a non-resident. Let's say for now she's a non-resident, just to make it so. If Mrs. Y used the money in South Africa that she's paying interest on. So Mr. X gave Mrs. Y, let's say, a loan, and Mrs. Y used that loan to go and buy a house in South Africa, and now she's paying interest. If that money was used in South Africa, so the money that the interest is being paid on, it is from a South African source. Okay, I. If it is a lump sum, a pension, or an annuity payable by a pension fund, pension preservation, provident fund, etc., and the services in respect of which that amount is so received were rendered within the Republic. Now, if you are working, let's say, for an employer, and you are contributing to a provident fund, so let's say you are working in South Africa, and you're taking your money every month and you put it into a pension or a provident fund, and now one day that pension or provident fund starts paying out, where did you render the services for that money that you put in there? In South Africa. Therefore, this pension or provident is in South Africa. They say, provided, here's a proviso, provided that if the amount is received or accrues in respect of services which are rendered partly within and partly outside of the Republic, only so much of that amount as bears to the total of that amount the same ratio as the period during which the services were rendered in the Republic bears to the total period during which the services were rendered, must be regarded as having been received by or accrued to the person from a source within the Republic. Right, so what does that mean, guys? Okay, so let's say here, Mr. X worked for Coca-Cola for 30 years and contributed to the Coca-Cola pension fund. He worked for Coca-Cola South Africa for 20 years and was transferred to Coca-Cola USA, where he worked for 10 years. Okay, so he worked 30 years in total. 20 years were in South Africa and 10 years were in the USA. Now that pension fund pays him a monthly annuity or a lump sum. This is to make it a little bit simpler. It says it pays him a lump sum of, I'm just going to make it a little bit easier. 3 million rands. That's how much it gets out. So, what is from the South African source? 3 million times 20 over 30. So, 2 million is from a South African source. And 3 million times 10 over 30. 1 million is not a South African source. And make sure that you hear what I'm saying here. I'm not saying what is taxed in South Africa just yet. I'm saying what is from a South African source. We're only talking about source rules here. In this case, only the 2 million rands will be from a South African source. Now, why I'm pointing this out to you is it might have been that it was the other way around here. He worked in the USA first for 10 years, and then he moved to South Africa and worked here for 20 years. So he's now a South African resident. Then in terms of the gross income rules, that full 3 million rands will be gross income in South Africa. But still, what is this amount that's from a South African source? Only the 2 million. Okay, so I don't want you to get confused. You have to pay attention to this for when we are talking about source. We're only talking about source for now. Right, then J. If it is an amount that was received in respect of the disposal of an asset that is immovable property, and that property is situated in the Republic. So they're saying if you sell a property, immovable property, so land and buildings, if you sell that and that property, the land and buildings are situated in South Africa, then it's from a South African source. K says constitutes an amount received in respect of the disposal of an asset. So again, it's a disposal of asset, but they say other than an asset contemplated in paragraph J. This paragraph J talks about immovable property. So they're saying, but K then talks about then is thus movable property. So they say it's not the same property we talk about in J. J talks about immovable, so it must be the opposite. Right, so they say it constitutes an amount for the disposal of an asset if two situations, 1 or 2, and again I want you to see there's an or here, so either 1 or 2 apply. 1, that person is a resident. 2, that person is not a resident. Not a resident is a resident. So this is what I'm trying to show you. I'm talking about an asset is disposed of by a resident, or an asset is disposed of by a non-resident. That's what I'm saying. The source rules is a concept that exists separately from the concept of a resident and a non-resident. Right, so if a resident disposes it and it is not effectively connected with a permanent establishment outside of the Republic, and the proceeds from that disposal are not subject to any taxes in another country, then it is from a South African source. So if a South African resident sells it and it's not connected to a permanent establishment of that person outside the Republic. So here's Mr. X. He sells a computer, a PC. If that PC was used by a business in the USA, so he's got a little business in the USA, and taxes were paid on it, then it is not from a South African source. So this says this PC must be used not in the USA, and there must also not be any taxes from a different country on it. 2, that person is not a resident. So if it's a non-resident, and they say, and that asset is connected with a permanent establishment of that person, which is situated in the Republic. So here's Mrs. X. She is a citizen of England, so the UK. She has a business as a sole proprietor in South Africa, and that business she uses a computer. She sells that computer. So although she's a non-resident, the computer is effectively used with connected to a permanent establishment in South Africa. So therefore, that sale that she makes, the money from that, is from a South African source. Again, guys, we're just talking about source here. Don't want you to get too confused or anything. Just focus on what I'm saying there, just source. As you go along, you'll see where source is important. So, for example, you've already seen the gross income definition for non-residents. They talk about the amounts to be from a South African source. So, if you apply these source rules, and it meets all the other requirements of gross income, it means it will be effective for a non-resident. This situation where it's for a resident and so forth, you've not yet encountered anything where it's specifically, they talk about source for South African residents. So don't think this overrides anything to stays for. This is just a separate thing on source. How do we know what is a South African source? So the slide here said, does Section 9 apply? That's what we looked at now. If it doesn't apply, we have to look at the common law. So now we're looking at the common law. So what is the common law? So the common law is the rule, it's a common law that affects and it applies to everybody in South Africa. There was a case, the Lever Brothers case, that told us how do we determine what is the source of income. Now again guys, the name of the case is not as important as the principle. The principle says the source of the income is the originating cause. So how do we know what the originating cause is? We have to ask these two questions. First question is, what is the originating cause of the income, and where is that originating cause located? Originating cause means what is the thing that happened, or the event, or the transaction that gave rise to that income. So this is an example to illustrate what it means. So Miss X is a citizen of the USA. She's a singer. She signs a contract in England to perform at a concert in South Africa where she is paid $1 million. So now I want you to see we've got the USA, we've got England, and we've got South Africa. So what is the originating cause of that $1 million? What does she do to give her that $1 million? Is it the fact that she's a citizen? Is it the fact that she signed a contract in England? Or is it the fact that she performed in South Africa? What is the thing that caused it? The singing in South Africa. Think about it. That's the event, what she's getting paid for. So, what is the originating cause? It's the singing. Where is that singing located? In South Africa. So the source in this case, in terms of the common law, will be South Africa. So there's been other case law also that has given us other principles of what the source is for the common law. Okay, now guys, what is important about this, these are just some examples from case law. These are most of the time quite common, but whenever you see a question and Section 9 does not apply and you have to apply the common law, it is by its nature very tricky, this thing, especially nowadays in our modern times that we're living in now. People are doing things, they're sitting in one country, they're doing things on the internet, and they have transactions and customers in other countries. It is complicated. And these type of things often will go to court where people have to now argue it out. Your perspective as a student, you just need to be able to argue it out. If you bring this up and you argue what the originating cause is and where it's located, that should give you your marks. Now, I also will just say this is not very commonly seen at a CTA level that we discussed this. Okay, so here's a couple of examples. A purchased annuity. So in purchase annuity is where you pay to receive money on a regular basis. So for example, I pay, let's say R1 million to Old Mutual. And Old Mutual then promises to pay me 10,000 rands per month until I die. So, if I live now for 50 years, Old Mutual is going to be out of pocket. If I only live for 5 years, Old Mutual scores. But this is a purchase annuity. I pay to get 10,000 rands per month for the rest of my life. What is the originating cause of they said around that? It's the place where the contract was entered into. Contractual annuity is pretty much the same thing. It's also where it was concluded, so where it was entered into, same thing. Services rendered. So, let's say, for example, Mr. A is the marketing director for Coca-Cola worldwide. He creates an ad in South Africa that is used in the USA, and he is paid 20,000 rands for that. Right, where did he do that work? Where's the services being performed? In South Africa. So the source is in South Africa, even though it's used in the USA. Just as an example. Director's fees is a place where the directors ordinarily transact his business. Does not matter where the director is located, is what they're saying here. So again, especially nowadays when lots of directors are doing things online, where is that the work that they're performing? Where is that going to affect the business? Okay. Again, this can be tricky. But most of the time what they're trying to say here is where the business is located. So let's say there's a director of a company sitting in England, the business is in South Africa, it's probably going to be South Africa. Rental income is the location of the asset or the location of the business. They say look at the dominating factor here. Okay, so let me explain to you what this means. So let's say that there is a flat house in Cape Town that is being rented out. The owner of this flat is a resident of the USA. This flat is located in South Africa, so that rental income will be from a South African source, even though the owner is in the USA. But now, the example I say here, car hire business, is for example, right, so here's our vehicle. And we have a lot of these cars, right, which we rent out to people. So we are like Avis, a company like Avis. This branch of Avis is situated in Johannesburg, South Africa. And they've got lots of these cars, right? I'm not going to show all of them. They've got 100 cars. Someone comes and rents a car and takes it all the way up into Zimbabwe for a week. They use it in Zimbabwe and they have to bring it back to Johannesburg. So although this asset was being used in Zimbabwe, and that's where the person used it most of the time, the nature of this business is that it rents out cars that are being used all over the place. This case, look, the source will rather be Johannesburg. Right, and then we have business income. They say, what's the source of business income? The dominant manner in which the business is conducted must be determined. Usually, it's the originating cause is either the place where the capital is employed, or it can be the place where the business is carried on, whichever is dominant. Okay, so this is a common example. There's a business, let me use that, in Uganda that makes leather products. They create in South Africa, the Republic of South Africa, they have a depot. So, customers buy online from this business in Uganda, and then they just go and pick it up in this depot in South Africa. What is the originating cause of the business? Right, it'll be here in Uganda, where the products are manufactured, where the capital is employed. That's what it means. This is just a place to pick up these products. Right, so Uganda will be the source of it. Again, guys, I know this can be confusing, and it seems a little bit confusing, but again, in a question, if they had to ask it, and like I said, this is not something that really gets asked, but if they had to ask it, there would always be enough information, and you would have to just argue it out. Usually with these questions, your gut feeling, what causes this income, is usually the correct, or will usually guide you in the correct direction.